Hi, good afternoon, everyone. Thank you for joining me. Today, using ValueLine's digital platform and investor tools, I'm going to show you how to quickly and easily find worthwhile investment candidates. Going further, I'm going to recommend one stock to buy right now. After the presentation, we have allotted time for questions and answers. Also, if you would like to revisit this presentation at a later date, it will be posted on valueline.com and our YouTube channel within the next 48 hours. Lastly, as an added bonus, attendees will have the opportunity to receive an additional stock recommendation. I will provide details at the end. To start, for those joining us for the first time, I want to provide a brief overview of who we are at ValueLine. We are a New York headquartered corporation that has been providing investment research for more than 85 years. Our flagship product is the ValueLine Investment Survey. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on more than 1,700 equities that trade on the New York Stock Exchange, NASDAQ, and Toronto Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by ValueLine's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. Our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, ValueLine has no investment banking business with any company, including the 1,700 that are included in this service. ValueLine does not execute trades for its subscribers and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific equity. What's more, our staff of professional securities analysts are not permitted to own shares of any company that they cover. As a jumping off point for our stock search, let's start with an overview of the economic situation, as well as the ValueLine Research Department's view of the stock market. This is especially important since the market has been quite volatile of late, and investor trepidation stemming from a variety of issues are still present. The following content was prepared by Harvey Katz, ValueLine's chief economist. There are some cautionary flags being raised on the economic front. For starters, non-manufacturing activity slowed from its once formidable rate of growth in November, while manufacturing, albeit rebounding last month, held below the levels of August and September. Further, our foreign trade gap has reached its highest point in a decade on easing exports. Finally, job growth moderated in November with just 155,000 new jobs added. That made it 2 months in the past 3 in which this sector had disappointed. Difficulty in filling positions may be a factor. For now, we think the economy will advance at a decent pace in 2019, with growth likely holding in the 2.3% to 2.5% range. That would be well below the 4.2% and 3.5% gains tabulated, respectively, in the second and third quarters of 2018, and perhaps less than the 2.5% or so GDP improvement expected in the current quarter. Still, such prospective increases should be sufficient to keep the corporate profit engine running smoothly. There are risks to this reassuring forecast, the most notable of which is the uncertain global trade outlook, especially with China. Although a short-term truce is in place, there are details that need to be worked out before a permanent accord can be inked. Our sense is that some trade agreement will be reached, partly because of softness in China's economy. Also, the Federal Reserve's 2019 interest rate stance is a little hazy at present, reflecting shifty economic trends at home and a murkier outlook abroad. Finally, investors are grappling with changing Treasury note yields. Since some shorter notes are now higher yielding than longer-term notes, which is the so-called inverted yield curve, the inversion suggests the possibility of a more serious business slowdown. Meanwhile, the markets continue to gyrate. Recent selling squalls and subsequent buying outbreaks aren't new to this aging bull market. But by the standards of the past decade, this fall's volatility is at such a fevered pitch that it is likely shaking the confidence of even seasoned investors. In conclusion, at times such as these, and particularly with the fundamentals still sound, the best strategy is to keep calm and carry on. Indeed, one should not be tempted to make sudden shifts out of passion. I think Harvey's view holds quite a bit of merit. It is important not to panic at this time. Rather, a flight to quality, to me, seems like the best idea, and that will be the goal of our search today. Thankfully, Value Line provides the tools and information to incorporate factors such as this into an investment strategy. Let's go to the screener and get started. The screener is located under the Find Ideas tab. Users have access to preset screens as well as 50 fields. I should also note that the screener possesses more than 200 fields in total, but those are only available with higher level subscriptions. I'm now going to run a screen, and as mentioned, I'm going to look for highest quality stocks that provide some meaningful upside. Obviously, let's start with stability, and thus I want to focus on the stocks with the lowest risk profiles. Value Line's proprietary safety ranks makes this easy. The safety rank measures the total risk of a stock and is arranged on an easy-to-understand 1 to 5 scale, with 1 being the most stable issues. I want to highlight the fact that stocks ranked favorably for safety have, in the past, held up far better than the broader market during corrections and downturns. This should be particularly relevant in today's market environment. So let's focus on stocks ranked 1. So we click on the field, and then select 1. These are the most financially sound companies, and the stocks have a history of relative stability. It is worth noting that of the nearly 6,000 stocks in our database, only 129 garner this top rank. For those that don't know, our safety ranks are derived from our financial strength grades and our price stability scores. For more information here, I recommend a read of our ranking system guide, which can be accessed via the investment education section of our site. To further take risk into account, I'm going to add beta to the screen. Beta is a measure of the volatility of a stock relative to the overall stock market and is calculated by Value Line. A beta of 1.00 suggests that a stock will move up and down roughly lockstep with the market, so that a 3% increase or fall in the broader market would likely be accompanied by a similar percentage move in the stock. A beta higher than 1 means the stock tends to be more volatile than the market, while a beta lower than 1 suggests the stock's price fluctuations will be more muted in relationship to the broader market. It is important to note that news outlets and research houses often calculate beta differently, and you will commonly see different betas for the same stock when comparing different platforms. Thus, it is vital that when using beta, you focus on just one source, especially when you are evaluating several equities side by side. So for the beta field, I'm going to set the high limit to just 0.9, or 10% below the market average. These stocks, historically, have been more stable than the broader market. As you can see, this removes about 50 stocks from our list. We can add another defensive layer by considering dividend yield. As most of you probably know, dividend-paying stocks tend to not fall as much as the broader market during bearish times. The current median dividend yield for the 1,700 stocks that we track in the Value Line Investment Survey is 2.4%. This figure is updated and published every week on the front cover of the Summary Index. For added stability, let's make 3.4% our low threshold, or 1 full percentage point above the median. I also want to mention that this yield encompasses our research department's estimates for the next 4 quarters of dividend payments. Thus, this is very much a forward-looking yield. This is an important distinction since other research houses, screeners, portfolio software, and data providers commonly utilize a trailing dividend yield. We feel our calculation is simply more useful. All right, we're already down to 19 options. Now let's focus on performance. I want to isolate stocks that Value Line expects to outperform the broader market over the near term, and I'm going to utilize our popular and time-tested timeless ranks. Like safety, the ranks are from 1 to 5, with 1 being our top rank. 1s and 2s are expected to outperform the market over the next 6 to 12 months. 3s will likely mirror the market, while 4s and 5s may lag. A great deal of information on the ranking system for timeliness is available in our guide, but I should mention that although the calculation is purely quantitative and proprietary, the system is based on a number of factors including earnings results and stock price action. So let's add the 1s and 2s to our screen. Okay, 8 results, which is nice and manageable. According to our criteria, these stocks are the safest, offer worthwhile dividends, and are expected to perform relatively well over the near term. A few of these may well fit nicely in your portfolio, depending on your time horizon and strategy. For those of you that have followed this series of webinars, you will know that I recommended Verizon on October 24th, and I am still bullish in regard to the company and stock's outlook. As for the others, I evaluated this list earlier today and incorporated quite a bit of input from our senior analysts. In the end, we decided that Consolidated Edison, ticker ED, is today's one stock to buy right now. Before I dive into Con Ed, please note that screens can be saved and revisited later by utilizing the button at the top. Clicking on the company name will take us to the digital report, where the data, information, and analysis is arranged in more than 15 modules or boxes. These modules can be moved around or resized, so you can create your own custom stock report. Once you alter the presentation to your liking, you can save the changes via the sliding horizontal action bar. The next time you come to the stock report, it will look the way you set it up. You can also apply these changes to other stocks. If you live in the New York metro area, you are almost certainly familiar with Consolidated Edison. For those that don't, I will provide some details about the company and its scale of operations. This information is provided in the business description module. The company sells electricity, gas, and steam in most of New York City and Westchester County. It also owns Orange and Rockland Utilities, which operates in New York and New Jersey. Con Ed has more than 3.7 million electric and 1.2 million gas customers. It has 15,000 employees and a market capitalization of around $25 billion. Let's now take a look at the valuation module. First off, by clicking on the Show Chart button, you can see how the stock is doing of late. I can also enlarge the module to better focus on it by clicking on the double arrows. Oh, I'm sorry, making it larger. As you can see, the stock price has held up relatively well of late. More specifically, over the past month, ED is up 4% in price, while the S&P 500 index is down 4%. Sticking with the valuation module, a quick scan of earnings, cash flow, book value, and other financial measures are all pointing in the right direction. In fact, we expect healthy gains on all of these fronts over the years ahead. Now that we see that the numbers are good, let's get more information from Value Line's research team. For this, I can of course utilize the commentary module, but I'd rather show you our classic one-page stock reports, which are available for all digital subscribers. They're available using the button on the right. This report was published a few weeks ago by editorial analyst Paul DeBoss. Consolidated Edison announced a sizable acquisition of renewable energy assets. The company agreed to pay Sempra Energy $1.54 billion for 981 megawatts of renewable energy assets, mostly solar. The project has $576 million of debt. Con Ed expects to finance the purchase with $715 million of common equity and $825 million of long-term debt. Please note that this acquisition closed on December 13th, and according to management, Con Ed is now the second largest solar energy producer in North America. We estimate that earnings will advance moderately in 2018 and 2019. Consolidated Edison Company of New York is benefiting from rate relief, customer growth, and the conversion of oil heating customers to gas heat. At the start of 2018, electric and gas rates were raised by $155.3 million, 2%, and $92.3 million, 5.6%, respectively. In 2019, the increases will be $155.2 million, or 1.9%, for electricity, and $89.4 million, or 5.1%, for gas. Our 2018 earnings estimate of $4.20 a share is slightly below Con Ed's target range of $4.25 to $4.35 because we include costs associated with the Semper deal. These reduced share net by 3 cents in the September quarter. As for the stock, as is the case with most utilities, the dividend is the main draw, and Mr. DeVos expects a decent increase to the payout in 2019. He is calling for a 10% hike. As for the equity's other attributes, not surprisingly, it is as safe as they come. Con Ed's business is extremely stable, and its operations are well defined. It is no surprise that it garners near perfect scores for price stability and earnings predictability. As you can see, these stats are right here. All told, Consolidated Edison is today's one stock to buy right now, and in my view, represents a relative safe haven during this period of market uncertainty and enhanced volatility. This marks the end of the formal presentation, and I will now tackle your questions. Please remember that I will provide information in regard to receiving an additional stock recommendation after the Q&A portion. All right, so just give me a minute. All right, here's a question. I subscribe to the print edition. Does Value Line Online update stock data every 3 months or daily? That's a good question. We put out these full reports on a quarterly basis, but our online digital platform updates a whole host of data on a daily and weekly and quarterly interval. For instance, anything to do with price is updated during market hours, so your PEs, your dividend yields, etc., as well as a lot of other data depending on our analysis. Is the cash flow listed considered free cash flow? There are several definitions of free cash flow. Our cash flow definition is typically not free cash flow. We calculate it by summing net profit and depreciation, subtracting preferred dividends, and then dividing by shares outstanding. There used to be a screen, 100 highest free cash flow companies. Does that still exist? Yes, it's actually published each week in the Summary Index, which I will show you now. So if we go back to the dashboard, the weekly Summary Index, and I believe it's page 33. Yeah, biggest free cash flow generators. Let's go take a look at that. So that screen right there. And this list, as long as all the other predefined lists, are updated on a weekly basis. Next question, how do we access Value Line online? Well, obviously, started our website, www.valueline.com, and you would sign in right here. Obviously, I'm already signed in, so I don't want to sign myself out as I'm answering questions, but that would say sign in with your username and password. If you don't know what your username and password is, call 1-800 Value Line. Does Value Line provide entry and exit points? Yes, several of our products recommend directly stocks to buy and stocks to sell. Quite a few actually do. as part of the Value Line Investment Survey. For instance, a lot of people read the analyst commentary or obviously use our ranks to know when to buy and sell. For more direct recommendations, we offer a whole slew of products. First off, as part of the Value Line subscription, there are 4 model portfolios, each one with a different strategy. Each one is 20 stocks and is actively managed. And each week, you get a full write-up and an updated table. And when there's a change, we always tell you. For instance, meantime, we are making one change to Portfolio 1 this week. And, of course, we tell you what is bought and what is sold and why. In addition, we have a whole host of monthly products like Value Line Select, Dividend Income and Growth, Special Situations, and Select ETFs, where you get new recommendations every month, as well as sell recommendations periodically. So if you're looking for a total solution of being told when to buy, when to sell, any of those options could work depending on your risk profile and strategy. And here's a question about Value Line Select. Value Line selects 1 stock per month. Does that differ significantly from what you do here? Yeah, it's quite a bit different. Obviously, here I ran a screen, that I thought reflected what's going on in the market now. But that requires work, and it got down to 8 candidates, and then you'd have to research all 8 and figure out which ones fit in your portfolio. Select is much more direct. We give you 1 stock to buy that month, and then periodically tell you when to sell. And our phone number is 1-800-VALUE-LINE. It's been a while since I signed up. How do I know what my subscription type or level is? Well, if you sign in and go to Browse Research, for instance, you can see what your coverage universe is. For instance, this is a Savvy Investor subscription. That gives me access to the 3,400 stocks that we put out full reports on. If you're not sure, though, call 1-800-VALUE-LINE and we'll be able to help you. All right. Appreciate what you're saying about the utility safety. However, with the expectation of rising interest rates and swelling federal deficits, won't these shares be impacted disproportionately? I mean, it's true that higher interest rates are typically not good for dividend stocks like utilities. I can't argue with that logic. However, in a market where we've seen a notable correction and there are some economists calling for a recessionary period or a down market in 2019, I think a flight to safety and a near 4% dividend yield would be quite good in that kind of market. So I do think Con Ed would be very competitive with interest rates, with some upside. Does Value Line indicate a fair value for a stock? While we don't use that term, we provide all kinds of metrics that would show whether we think a stock is undervalued, overvalued, or fairly valued. Obviously, we provide, we can go to the Con Ed report. We provide our PE ratios and relatives, so you can see what, for instance, the median is Con Ed's average from the past 10 years. One very popular clue is to use the chart and the dividend per share line, this solid and then dashed line. One way to look at it is if the line is below the current price, which it is now, and Con Ed is currently trading at $80, so it's a little bit higher. So when the line is below the stock price, it is one signal that the stock could be undervalued. Obviously, the opposite is true. If this line was above the stock price, it could be overvalued. And of course, you could look at Con Ed's, for instance, dividend yield. As you can see, the yield is a bit lower than its historical average, and we expect it to be a little bit higher in the future. So we provide a lot of those things, but not a straight fair value number. Next question, a bit off topic. Any plans to start a service on cryptocurrencies since many brokers are getting involved? That idea has been kicked around the halls here, but nothing's on the horizon. We would only do it if we got a real firm grasp on cryptocurrencies direction before we ever provided any kind of recommendations, and we're simply not there yet. All right, let me just take a quick scan, make sure I didn't forget or miss any questions. No, that seems to be it. All right. Thank you so much for your questions. Now, as promised, Value Line is making available an extra recommendation of a stock you can consider for purchase. It is only available if you call 1-800-VALUE LINE and press 2 to speak to a Value Line representative. Please mention code 1812-BONUS. That is 1812-BONUS. You will also receive a bonus month of service if you choose to buy or renew any of our annual products. No purchase is required for the bonus recommendation. All right, well, thank you very much and have a great holiday season.